first, BP plc is an integrated oil and gas company. The company's segments include Upstream, Downstream, Rosneft, and other businesses and corporates.
Yeah, Rosneft is a stake that they have in a Russian company, but remember, this is Deepwater Horizon country. This is BP, which in 2010 had the big explosion in the Gulf of Mexico. $60 billion worth of fines that they sort of working their way through in order to get back on track.
So 90.2 billion pounds. It's a PE ratio here of 31.3 and a dividend yield of 7.9%. Let's have a look at that share price graph. And
it's a pity, in fact, we can't do a 10-year chart, because then we would see just
the 2009 impact.
How it got thrashed then, but now it's kind of in recovery mode. It's a little bit trickier to value.
Your thoughts, Nick?
So yeah, double whammy at the Deepwater Horizon disaster. They managed to agree on a settlement. Yeah, $62 billion. Wow, that's a lot of money, and they have to pay that all the way up until 2027.
Yeah, there was a phased payback.
So it's $2 billion next year, and then $1.1 billion every year thereafter. That's a large amount of cash flow just going out of the business every year. So that was the one point. Second point, oil prices halved. So now the company's in recovery phase. They're selling off assets in order to generate cash flow, to order to reduce the average price of oil essentially that they produce at. They want to get it down to $45 a barrel. So all these companies have the opportunity to really increase their free cash flow. BP definitely trying to do it along with all the other majors, and that's why we've seen some general share price recovery of some very low levels. The important point is, will this follow through?
And you don't sound hugely excited.
I don't, because I don't see oil spiking that much. I mean, if oil hovers around $50, they're making $5 a barrel. How much control can they have in really increasing volumes? Remember, they're just working with what they currently have. They're not spending as much as they used to with regards to capital expenditure. I mean, these guys used to spend, I think BP used to spend close to $26 billion per year on future projects. They're trying to get that down to 15. Still a lot of money, but remember, you are cannibalizing future growth. It's not just the oil companies. Billiton's been doing it, Anglers has been doing it. So it looks good on paper. You've got free cash flow coming through now. You've got the ability to pay out these really big dividends. PE ratios will probably start coming down, but you might just get caught in a little bit of a trap where it looks cheap, it looks interesting, but you might have to sit for a while. Of course, things can change. If the oil price decides to spike back up to $80, then it's a completely different story. But
especially because they've
just don't see that at the
taken all
moment.
these costs out of the business, and they would benefit hugely.
And because they're in the sort of twilight zone where no one is really sure whether they can buy the stock. They got some stale shareholders who lived right through the collapse and the recovery subsequently.
That analogy, twilight zone, I don't think is going to appeal to many investors out there.
Well, you know, there's a lot to be said perhaps for people who stand up and put their money on the line when you have a Volkswagen emissions scandal or a oil spill like this. The trouble is, you never really know whether the bloodletting is done, because now they've done various legal settlements, but then you find that there's some sort of after effect that comes through and so on.
Hot or not?
I should have picked different stocks, but I'm afraid tonight, no, that one's not hot either.
And Nick?
Not hot. Wow,
Not
we are
hot,
on a roll.
sure. We've got 3 not hots in a row, and the sync continues.